CLSA has released quite an optimistic note on Hindalco. They have maintained a buy and they've placed their target price for the next 12 months at 500 rupees per share. Now, they believe that the bear case scenario has been priced in. Hindalco's share price has seen a lot of underperformance compared to the benchmarks, compared to, the other metal stocks as well. This despite the fact that LME aluminum prices have relatively remained a little resilient. Now, one of the, reasons, according to CLSA, as to why the share price has been underperforming, there are concerns around Novelis's auto sheet sales. That comprises 18% of the company's consolidated EBITDA. But the concerns essentially are due to semiconductor shortages. Now, this will in turn impact auto sales demand for auto sheet demand for Novelis as well. But according to CLSA, these concerns are overdone. They say that their sensitivity analysis indicates that a 30% drop in auto EBITDA impacts fair value by 7%. And they also note that several of Novelis's auto contracts have take-or-pay agreements, which should partly cushion the volume impact. Further, the fact is that while auto is just one segment, the other segments are very strong. So, the strength in segments like the beverage can segment and improving scrap spreads will largely cushion any sort of fall in the auto segment demand. They say that beverage can sheet demand remains strong and scrap spreads have picked up from Q4 lows, which will further support recycling margins. Another trigger is their optimistic outlook on aluminum prices. They expect that the China market for aluminum will remain in deficit, whereas the rest of the world aluminum surplus will drop very sharply. So prices are likely to be resilient, driven by tailwinds like recovering demand, low supply response as well. Plus, of course, the big news on Russia imposing an export duty. So that in turn will further curb the supply of aluminum in the market. It will tighten the balance, especially in the European market. So yes, all of these reasons, and they say that Hindalco is down 8% in the past 1 month versus aluminium prices, which is, by the way, down 2%, whereas the Nifty has gained 5%, and the metal index is down 4%. So Hindalco has underperformed all of these parameters. They say that the price in analysis indicates a 30% reduction in Novelis EBITDA on strong aluminium LME, and given the strength in Novelis's other segments, it's basically implying a negligible contribution from auto sheets, which is really not the case. And that's the reason why they strongly reiterate a buy. Further, they expect that the commentary during the earnings, which will be coming up today, will further reinforce their confidence in the stock profitability and drive re-rating. 500 is their target price for Hindalco.